Thursday, March 4th, 2021, Monaco 64, home of alternative economics and contrarian views. We're going to look at how governments default via inflation. And I'm going to focus a little bit on the UK budget that was announced yesterday. But you can apply this rule to every country around the world, even the United States. And this is what I think is going to happen. So before I start looking at the budget from Rishi Sunak, the Chancellor of the Exchequer, I'd like to talk about this book very quickly here. Architect of Prosperity, Sir John Cowperthwaite, and the Making of Hong Kong by Neil Monnery. Very technical book. I'm almost 2/3 of the way through it, but the most important message about this book, though, is how Hong Kong became such a prosperous city-state or colony at the time, from being like just an entrepot of international trade up until World War II, kind of a backwater, small city, relatively small city, into becoming a global financial center, metropolis, very prosperous. Just to give you an example, it had 1/3 of the GDP of Britain after World War II. And I think by 2015, it was almost the other way around. It became so prosperous. And this is really the story, not just of John Cowperthwaite, who was the financial secretary from 1961 to 1971, but also his predecessors, and how they kept the budgets in Hong Kong balanced or in surplus. Rarely was there a deficit. And they knew that the way to get more revenues, because Hong Kong wasn't just a laissez-faire place, they had to build up the infrastructure as well. But they knew that if they punish business with regulations, if they punish individuals with a heavy or high income tax, they wouldn't get as much revenues. And they knew that Hong Kong had to keep reserves or a surplus in their budget for emergencies. And that's what they did throughout the first, let's say, 15, 20 years in the post-war era. They did it after that as well. But I've come to the part of the book around early mid-60s. And it's very interesting because every year when the financial secretary used to come out and give his budget, there was not much publicity. The papers didn't really talk much about it because it was boring. They used to forecast always a deficit, but always get surpluses. The size of government in Hong Kong was relatively small. So what I'm trying to say here, if this country, the UK and other countries around the world in the EU and the US, if they really want to become prosperous, they have to follow the example of Hong Kong, where budgets are something that the papers don't even cover, something that's very boring, that you're always getting the balanced budget and the surplus and the small government. So thankfully, Hong Kong realized that, but with what we've got here in the UK and everywhere else, I don't expect any prosperity going forward. So I'm going to cover a little bit this budget, but it's all the same. It doesn't matter which party is in power, which chancellor is in power. They're going to keep the size of government growing. And that's going to lead to more and more misery for the general public. Yes, a few people, sectors will benefit. I saw that he's giving a break to the banks again in terms of the corporate tax increases, I think. So this is how the FT portrayed this budget. Rishi Sunak delivers spend now, tax later budget to kickstart UK economy. Well, that's, I think, gonna fail as well, this kind of strategy, because individuals and businesses are not stupid. They look forward and they know that all this government largesse that we've seen since this crisis started, not only since this crisis, but since the last financial crisis in '08, the UK government has been really spending too much. It's been running huge deficits. Yes, people think the Tories prior to these Tories were doing, how can I say, what's the word? Austerity. But I remember very well George Osborne, the chancellor, from 2010 to 20, I think 16 or thereabouts. He said in 2010 that by 2015 we'd have a balanced budget, and here we are in 2021, and I think the budget deficit for the fiscal year ending at the end of March, beginning of April, is going to be like over 400 billion pounds, which is basically 25% of GDP. So all the projections he's making, all the forecasts, they mean nothing. But what you can take to the bank is that they're going to keep spending, the government, and government spending counts as GDP. They're going to keep the furlough. The furlough scheme was supposed to end last October. Now it's going to end in the end of September this year. That's more spending. That's going to technically keep people employed. So they're going to say, oh, you see, the economy is growing, or even if it's not growing that much, it's better than expected. Unemployment is low. It's all a farce. What they're going to be doing as well is, with the Bank of England, they're going to keep interest rates down to zero. They're going to manipulate the yield curve, keep yields below 1%. And you can bet inflation is going to run hot and the government is going to do a lot of the heavy lifting because the Bank of England and the monetary system is going to oblige. We don't even know. There's a ways and means account where the government takes money, doesn't even borrow directly from the Bank of England. How much are they doing there? So what's going to end up happening? We're going to have a very lethargic, slow-growing economy in the private sector. We're going to have all this government interference, government acting in the economy. It's going to drive up prices of scarce goods and services because the economy is not going to do well. The yield curve control and the zero rates is going to keep the debt from growing that much. The debt as well doesn't change size. You know, a billion in debt is always a billion. But then if the currency is losing value, the currency loses value, but the GDP looks better. And with that, you're able to pay off the debt, to make the debt look smaller. But the people who are really going to suffer from this are savers, because if you hold a lot of savings in the fiat currency that's being debased in order to write off the debt, and that's what I mean by default. Governments don't have to default. They can just inflate away the value of the currency. So it takes more and more currency units to buy things, and that makes the economy look bigger. And the debt, of course, as I said, doesn't change. So I think that's what they're trying to do. Will it work? I'm not too sure, because this is such a huge situation that we're in terms of debt and deficit spending. And the fact that I said companies and individuals are not stupid. They're going to be reining in because they know that in a few years' time, the taxes are going to come. So whatever happens, one thing's for sure, we're going to get a lot of inflation. And if they're not able to get as much inflation as they want, I think we could see the currency drop even more, because the Bank of England is going to be forced to create even more or print even more money out of thin air. So it's a big mess. And as I said, the people in the middle are going to be hurt very hard. Very wealthy people know what's coming. They've got a lot of assets. They know how to protect themselves. What about the people at the bottom? Yes, they're going to suffer a lot too, but I think the furlough scheme is like going to mutate into a kind of universal basic income because we've seen that it's been extended from October last year almost to another 12 months. And they're just going to keep giving people money out of thin air. And yes, that money is going to be devalued through inflation, but it's going to make it a little more palatable for these people if they're ever able to get their jobs back as well. So yeah, the people who are pensioners, retired, or also middle class, upper middle class, who have a lot of savings, they're going to get annihilated unless they move into assets that will do well in an inflation. And that's usually hard assets, right? Precious metals, commodities, gold and silver. So what about real estate? Well, real estate, I think, will do fairly well. Not sure. They have other schemes coming up for real estate. So yeah, I expect that to do quite well. But I really think that hard assets, commodities, precious metals will outperform real estate. It's always a good thing to have real estate as long as it's not highly leveraged with a lot of debt or mortgage behind it. So that's how they're going to do it. And I've noticed they've kept the tax rates the same, but they're not adjusting it for inflation next few years, I think. So all that's going to do is drive up a lot of people into higher tax brackets. And you might say, well, that means that they're doing well. Yes, in nominal terms, they'll be doing well because of the inflation. But in real terms, they're going to be losing out because the inflation is going to be a lot higher than people think. And they're going to be shortchanged. So the only people who are really going to do well, as usual, is the government because they want to stay in power. The banks are going to do well because the more debt that the government issues, the more fees the banks make. Because you have to understand, when the government issues debt, it goes to the bond market, and the bankers are the brokers for that. So the bankers will always benefit, and the very wealthy, because the economy is going to be kept artificially high. Asset prices are going to be still relatively high. So that's what I expect. They're going to inflate away the debt. It's like financial repression. People who put money in fixed income like gilts or treasuries, they're going to get hurt really badly. And a lot of people might be fooled though into believing the CPI or inflation data from the government. A lot of institutional investors who manage pension funds and other funds for local governments, for example, and things like that, or defined benefit private pension plans, they're going to be forced by the regulator to stay in the fixed income market, which is going to decimate the value of their clients' funds. So there you go. With that, let's quickly look at where the markets are this morning. There's a lot of talk about the Federal Reserve, that they're going to do Operation Twist. They're worried about longer term yields going too high. Or there's a talk now of SLR, which is keeping the zero, basically, reserve requirement that they instituted last March. And that's to do with the BIS, and that runs out at the end of this month, March this year. And now the talk is that they're going to extend that. So that means that banks don't need to keep any reserves. I mean, if things were so great, the stock market was at all-time highs almost. Why are they having all these problems? All this need to keep liquidity going, right? So I just wanted to say that. The same thing is going to happen in the States, as I said. So savers are going to be decimated. What about the stock market? Well, the stock market here in the UK, for example, the FTSE is still below the level where it was back in 1999, 2000. We were around 7,000 at the time. As I speak here, we're at 6,600. So it's not a bad place to be, the stock market, I guess, but it's very overvalued, especially versus commodities, in my opinion. But that's for you to decide, to have your own asset allocation mix. So it's just before 8 a.m. London time. I'm a little earlier today. So we got spot gold up, or paper gold really, up $8 at 17.1950. The high's been 17.21, the low 17.05. Yesterday we almost got, well, we got to I think 17.01. So that's holding right now. We've got spot silver up 5 cents at 26.12. Range has been 26.32 to 25.89. Dow future down 22. Nasdaq 100 future down 17. S&P down 6. The pound is unchanged, 139.52 versus the dollar, of course. The euro is down a tiny at 120.55. So yeah, the dollar has strengthened in this week. I think last week it got sold off and now it's rebounding a little bit. And as I've said many times, try to ignore relative values of fiat currencies against each other. They're all going to sink, as I've been saying since 2007, versus real money, gold and silver. So dollar is up 1/8% versus the yen. We're above 107. Dollar is unchanged versus the yuan, 647.30. High grade copper is down almost 2% at 406. Still above 4, which is a very elevated level. I guess we're seeing a little bit of a breather. Commodities, general commodities are taking a little bit of a breather. But crude oil, on the other hand, is back up above 60. We're at 61.70 WTI, up about 0.75%. And to finish off, let's quickly look at the Treasury market. Treasury yields yesterday spiked up almost 6 basis points during the day. I saw we got up to just below 150 in the 10-year. Right now, we're down just over 1 basis points at 145.80. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.